Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. The dry bulk shipping industry experienced a better 2024 than expected. The outlook for dry bulk shipping remains solid in spite of potential global trade wars. The global market for dry bulk shipping hit $157.8 billion in 2023, and it is expected to reach approximately $187 billion in 2030, expanding at a compounded annual growth rate of 2.5%. That kind of annual growth would not exactly be exciting for the technology sector, but for marine shipping industry, this represents reliable, solid, predictable growth. And that should help dry bulk shipping companies like Euroseas Ltd. They're traded on NASDAQ under symbol ESEA, improve their profitability and enhance their dividend payouts. John?
Yeah, thanks, Mo. Euroseas is a marine shipping company that has been around for more than a century, but it only went public in 2005, I think. The Athens, Greece-based company owns and operates dry bulk and container carrier vessels and is a provider of seaborne transportation for dry bulk and containerized cargoes. The company has a fleet of 19 vessels. For those that are interested, this includes a 12-feeder and 7 intermediate container ships. Euroseas' 19 container ships have a cargo capacity of 58,861 TEU. That represents 20-foot equivalent unit, which is the length of a container. Fully delivered basis of its vessels under construction, the company's fleet will increase to 26 container ships with a cargo capacity of about 75,460 TEUs.
On the financial front, I see that 2024 revenue jumped 12%.
Yeah, now for the fourth quarter ended December 31st, 2024, Euroseas announced that revenue increased 8.7% on an annualized basis to a little more than $53 million. Net income actually slipped marginally, like slightly more than 1% to $24.4 million or $3.49 per share, but adjusted net income came in at $23.3 million or $3.33 per diluted share. Now, during the fourth quarter, on average, 23 vessels were owned and operated with an average time charter equivalent or TCE rate of $26,479 per day. Now, full year revenue actually advanced 12.4% to roughly $213 million. Full year net income slipped marginally to $112.8 million or $16.20 per share. Adjusted net income was $3.5 million or $14.87 per share. And in 2024, on average, 21.73 vessels were owned and operated, earning an average TCE rate of $28,054 per day.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for our free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. And John, I see that this company increased its quarterly distribution to 65 cents per share.
Yeah, after paying a reliable dividend for years, Euroseas Ltd actually paused its payout back in 2013, but changing industry dynamics, including increased profitability and earnings visibility, allowed the company's board to reinstate both its dividend and share repurchase program in May of 2022, and it has raised its payout twice since then, thanks to the company's strong charter book and growing fleet. It expects its earnings to continue to be strong and cash reserves to grow. Now, given the increased liquidity, Euroseas board increased its quarterly dividend to 65 cents per share, or $2.60 per share on an annual basis, for a pretty big forward dividend yield of 8.85%. Now, management said that in spite of revenue and earnings visibility, the share price trades at a large discount to its net asset value. This affords the company an opportunity to continue its aggressive share repurchase program.
And ESEA stock has triple-digit upside potential.
Yeah, according to management at Euroseas, its stock is fundamentally undervalued. Even though it's depressed, it's still doing better than the broader market. Now, as of this recording, it's trading hands at around $30.25 per share. And its stock is up actually 18% over the last 3 months, 5% year to date, and 16% on an annual basis. Again, far better than anything the S&P 500 is throwing up. Now, conservative Wall Street expects ESEA stock to continue its winning ways over the coming quarter. Analysts providing a 12-month share price target range of $53 to $60 per share.
John, thank you so much for your insights. Euroseas Ltd is a leading global marine shipping company with one of the lowest operating cost structures among publicly traded shipping companies. It has a large modern fleet that is going to get a lot larger, with the cargo capacity jumping 28% to 5,461 TEU. Euroseas continues to report solid financial results, has a strong order book, and unrestricted cash. Thanks to its strong cash position, it has also been able to increase its quarterly payout twice since 2024. Of note, 59.58% of all outstanding shares are held by insiders. This kind of big insider ownership should entice management to ensure Euroseas performs well over the long run. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.